Okay. Good morning, everyone. I'm Paul Jones, Staffordshire County Councillor for the Hensford North Division. I'm the chairperson at Audit and Standards. The meeting will be webcast live and archived for 12 months. It can be viewed on the Staffordshire County Council website, whereby the webcasts and other meetings will be located on there. I'd like to welcome all the members, officers and our two experts, David and Francis. Thank you for taking the time to be here, for your continued commitment to serving our community. We have a full agenda ahead of us, covering matters that impact the residents of our county. I encourage open, respectful discussion and thoughtful contributions from all members. Please uphold the standards of public life, Life's 7 principles of public life. If you'd like to ask a question, please indicate. We would like to keep the flow of the meeting going as much as possible. Mobile phones to be on silent, please, for the meeting. Thank you. Going forward, let's work together to ensure our decisions reflect the best interests of the people we represent. With that, can I ask if we can all introduce ourselves briefly, please, for all that are watching online. Thank you.
Good morning, everybody. I'm Lisa Andrews. I'm the Assistant Director for Internal Audit, Risk Management and Insurance, and also Adult and Children's Financial Services. Good morning, everybody.
Good morning. My name is Deborah Harris and I'm the Chief Internal Auditor here at Staffordshire County Council.
Good morning, everyone. My name is Rachel Spain. I'm the Chief Accountant and Deputy Section 151 Officer.
Good morning all, Pete Shakespeare, Director of Finance and Resources and the Section 151 Officer.
There we go. Good morning, Councillor Simon Tagg, Councillor Westlands, Thistleby and Keele and Newcastle-under-Lyme.
Good morning, Councillor Matthew Wallins for Lichfield City North.
Good morning, John Pendleton, County Councillor for Etchinhill under Heath.
Good morning, everyone. Neil Parton, Brayton and Ravenhill Ward. Thank you.
Good morning, everyone. Gordon Munro, Councillor for Wilnecote and Tamworth.
Good morning, everyone. My name is Andrew Clissett. I'm Burntwood North County Councillor.
Good morning. I'm Thomas Baker, the County Councillor for Chesinghay, Featherstone and Shareshill.
Good morning, Chair. Good morning, everybody. My name's Sean Bagley, County Councillor for Stone Rural North.
Morning, Chair. Morning, everybody. My name is Francis. I'm an independent member of the committee.
Good morning, everybody. I'm David Webster. I'm the other independent member of the committee.
Good morning. I'm Richard Lee. I'm a director at KPMG and the look after the audit of the council and the pension fund.
Good morning, all. I'm Liam Archer. I'm the Democracy and Governance Officer at Staffordshire County Council.
Good morning, Chair. Good morning, all. Kate Loader, County Solicitor, and here today as Monitoring Officer.
Thank you. And Alex, please.
Morning. Sorry I was late. Alex Fowler. I'm the Councillor for Lichfield Rural South.
Thank you. Liam, apologies, please.
Thank you, Chair. I've received apologies from Councillors Bentley, Hales, Humphreys and Luca. Thank you.
Do we have any declarations of interest? So we'll move on to minutes of meeting held on the 22nd of April. Can I just to confirm the minutes from the last meeting, David?
Yes, approved. Yes, confirm.
Thank you.
Thank you, Chair. So again, good morning. So my name is Deborah Harris, Chief Internal Auditor, and my main roles and responsibilities is managing the day-to-day operation of the Internal Audit Service here at Staffordshire County Council, and very importantly, delivering the Internal Audit Plan. So I thought for the first time I would actually do a presentation of the Outturn, and I'll take things quite slowly because there's quite a lot of information to get through. So the main aims of today's presentation is really to provide members with some useful background information as to why we need to produce an annual internal audit Outturn opinion, and how that flows into some key governance documents at the County Council, such as the annual governance statement. Hopefully I'll be able to demonstrate to you today that this robust methodology has been adopted in formulating the annual internal audit plan, and that we don't just make things up or pluck things out of the air. So there is a very established, robust methodology for formulating our audit Outturn opinion. I'm then going to talk you through the main details of the work that has supported the Outturn opinion for the year, and that's the main meat of our Outturn report. And then finally, to provide you with comfort that our audit work is carried out in accordance with the quality standards, so therefore you can place reliance on the work that we're presenting to you today. So first things first then, so why do we need to produce an annual Outturn opinion? Well, the need for that is grounded in statutory requirements and also good governance practices. So exploring the statutory and professional standards first. So in England, the Accounts and Audit Regulations, Regulation 5, stipulates that every local authority should have an effective internal audit which evaluates the council's own risk management, governance and control processes, taking into account proper audit standards and proper practices. So the way that we demonstrate that is by conforming to and complying with the UK public sector internal audit standards. Now at this point I just need to alert you to the fact that although we have the UK public sector internal audit standards that have been in place since 2013 and also revised in 2017, as well as the SIP for Local Government Application Note, which is that document that interprets the public sector internal audit standards. These standards have recently been revised, and from the 1st of April we will be working to the global internal audit standards in the UK public sector. I know it's a nice snappy title. However, for the purposes of this 24-25 Outturn report, as the UK public sector internal audit standards were the relevant standards, I will be referring back to those throughout the course of this presentation. And just so you know, I will shorten the public internal audit standards to PSIAS because it's less of a mouthful, if you don't mind. So the PSIAS standard 2450 states that the Chief Internal Auditor should provide an annual report, and that annual report should firstly set out what the opinion is for the year. It should also set out a summary of the work that was undertaken in forming the opinion, and also a statement of conformance against the public sector internal audit standards. So hopefully, as we go through the report, you'll see those three elements loud and clear throughout the document. Another reason why we produce the annual Outturn report is that it supports the annual governance statement, and the internal audit opinion is a key source of assurance for the AGS, which is a key governance document that gets published alongside the statement of accounts. And the AGS reflects the views of the council's effectiveness of the governance arrangements, and therefore, as you can imagine, the internal audit opinion is a crucial component of that. Another reason why we produce the annual Outturn opinion is that it enhances the accountability and transparency. So it allows members here today, and also members of the public and senior management, to see how independently we have assessed the control environment of the council. It also drives continued improvements as well, because once you receive limited assurance reports or details of high-level recommendations, that gives members an opportunity to actually, one, ask questions and scrutinise, and also allows members to ask officers across the services to come and answer further questions in relation to some of those control weaknesses, as well as to monitor progress in terms of the recommendations that are being made. So hopefully you'll see over time that there is a drive for continuous improvement and to continually improve the control environment. Also, by producing an Outturn report that also aligns with best practice. So I've just mentioned the Global Internal Audit Standards. Alongside that, CIPFA have recently produced a CIPFA Code of Practice for governance of internal audit functions, and that really does reinforce the need to have an annual audit opinion. So they're the key reasons why this Outturn report is being presented here today. So now the how. So how do we actually formulate our annual audit opinion? Well, just going back to the start, in April 24, we presented our internal audit plan for approval by this committee. And that audit plan, we have a very robust process for formulating it. It takes a few months to pull all the data together. We have an established risk assessment process that we feed into the annual audit planning process, and we talk to around about 60 to 70 officers across the piece, forming our judgment on what are the key risks for the year. And that really does help to target our limited resources to those areas that require sort of our attention. However, from time to time, and as you would expect, the audit plan will change. We do flex it to take account of any sort of emerging risks. So there will be work that gets cancelled, and also there will be additional work. All the additional work gets included and forms part of our overall audit opinion for the year. So then moving on to the delivery of the internal audit plan as well. Obviously, we need to do enough work to formulate our opinion. We can't base it on one or two pieces of work that are done. And we've set our own internal audit measure, which is 90% of the audit plan should be completed, which then gives us that scope and breadth of work to enable us to form our audit opinion. Moving on to the internal audit outcomes. So for every piece of work that we undertake by way of a systems audit or compliance piece of work, or a proactive counter fraud piece of work, we attach an engagement opinion to that. And those opinions, there are two positive opinions. One is substantial, which is our highest rating. We have adequate, and then we have a limited assurance. And that gives us an opinion on the overall effectiveness of the controls and the application of those controls in place within the system. As you would expect, the opinion that's awarded is also based on something. That's based upon the number of high, medium and low recommendations that are also made within the internal audit report. And also we have a clear established methodology for risk rating every control weakness, and that's built into our internal audit management system, and that detail is attached as Appendix 1 to your pack. Okay. So once we've done all of our audit work across the piece for the year, we then go about, in terms of producing the outturn, we go about splitting and dividing that work down into 5 clear headings. We look at the high risk auditable areas. We have a category for main financial systems. We have other system audits, compliance reviews and special investigations. And we take each of those categories in turn and we assess how well each of those categories have fared. And how we do that is that we have a benchmark of 90%. So within each of those categories, 90% of the audit work should achieve a positive assurance review. So that's either adequate or substantial. If they do, that category passes, and if they don't, unfortunately, that category fails. And then depending on the number of categories that pass or fail, we give an overall substantial, adequate or limited assurance opinion for the year. So we do have a clear methodology for assessing the control environment for the year. So let's delve a little bit deeper into our internal audit outcomes for 24-25. So you'll see that's on page 18 and 19 of your pack, and you'll also see, I should have mentioned this a bit earlier, that we do have the cross-references of the pack numbers in the top right-hand corner, so you can follow with your pack. So as part of the 24-25 internal audit plan, we assess the key risks as part of that. So those auditable areas scoring the highest risk rating, we classified as key risks. And hopefully some of these will resonate with yourselves. So cyber security, SEND, children's services, digital transformation, all those areas were included as top risk reviews for 24-25. And on page 18, paragraph 10, and moving over onto page 19 of your pack, you'll see the outcome of those pieces of work. And what you will see, there are no limited assurance opinions awarded, and there was only one high-level recommendation that was made within our internal audit work. So on that basis, this category passes. Moving on to our main financial system, so again as part of the audit plan, and as you would expect, we carry out an array of financial audit reviews. Although we do, obviously, a lot of our plan is operational audits, we do have a good healthy suite of financial audits because obviously our finances are very important. And we have a cyclical programme for our financial audits. So things like budgetary control and payroll, as you would expect, they're our sort of biggest systems. We would look at those annually, and also pensions. But for other financial systems such as procure to pay or sales to cash or VAT, we look at those either every other year or once every 3 years. And again, we have a cyclical programme that denotes when we look at those. Clearly, however, if there's an issue during the year, we can look at these system reviews at any time, and if there's ever a limited assurance review, we tend to re-pick that up as a follow-up piece of work the following year to give the service time to make their improvements and for us to go back in and give another independent look at that. So what you'll see on page 20 and 21, you will see a table which sets out our financial systems audit work, and to give you some extra context to these, we've put the various opinions in over the last 3 years just to give you that direction of travel as well. And again, it's pleasing to note that there are no limited assurance opinions awarded and no high-level recommendations being made within this category. So again, this category passes. Moving on to category 3 and other systems. So these other systems are systems audits that don't fit into the key risk reviews and don't fit into the financial systems. And our work spreads across all of the directorates, looking at lots of different operations and functions of the council. And what you'll see at paragraph 16 on page 21, that there were 5 limited assurance opinions that have been awarded during the course of 24-25, and they're set out in the table at paragraph 16. So we have corporate fees and charges, prevention of child exploitation, externalisation of legal services, special guardianship payments, and school capital schemes. Now, the school capital schemes limited assurance review, that was actually brought to the Audit and Standards Committee in February, so earlier this year. So what makes those internal audit reviews that were limited a limited assurance opinion? Well, we set out, and hopefully this is helpful to you, those high-level risk recommendations that were made within the main body of each of those reports, and that's at paragraph 17 on pages 21 and spilling over onto page 22. Now, these limited assurance reviews, we will issue those reports to you following this meeting so that you've got a chance to have a look at those, and then we'll bring them back to the committee at the next meeting in September so that we can ask you can ask questions, and also the officers that are responsible for those systems will also be present, so you can also get your own comfort around the improvements that will no doubt be ongoing straight after the report has been finalised. Hopefully you'll get some comfort about the actions and the positive actions that have been taken following those. Despite there being 5 limited assurance reviews and a number of high risk recommendations, this category scores a percent of 95% and therefore is above the 90%, and therefore this category still passes. Moving on to our compliance reviews, and this includes schools, it includes various other establishment audits such as within residential homes, complex needs units, comfort funds and education endowment funds as well. They're more just financial audits, and it's where, just so you know, comfort funds and educational endowment funds is where you get donations go into the establishments, and we have to do a very high level financial audit of those, so they come within the compliance arena. And you'll see on page 24, paragraph 23, the outcome of all of our compliance reviews. One thing that is probably going to jump out at you on the page is the number of limited assurance reviews that we have for schools at the moment. Those numbers have been going up, and you can see at paragraph 26 on page 25 that direction of travel. One of the reasons for the more limited assurance reviews that we've got over the years is that a couple of years ago we refined our fraud risk assessment for schools, which fed into the way that we selected our schools. Previously and historically, we used to look at the largest schools every year with the biggest budgets, and you might think, yes, that's great. However, what happened by doing that, some schools hadn't been audited for a number of years. We ended up refining our fraud risk assessment process for these schools, which as a result meant that some of the schools that haven't been audited for a number of years got looked at, and that then highlighted that some schools had fallen into some poorer practices or sort of moved away from some of the school's financial regs and procurement regs, and therefore we're now looking to target those schools that have not had an audit in 3 years, and we're towards the end of that now, so hopefully you'll see an improvement over the coming years. Also, to combat the level of non-compliance in terms of schools' financial regs and procurement regs, we have a dedicated resource now that does targeted communications and various data analytics that looks at non-compliance, and I'll talk more about this a little bit later in terms of our continuous controls monitoring, where we target those schools that we can we'll see quickly from using the data if there's something that might be amiss. And we actually go and we talk to those schools and we get them to explain why they're doing things in a different way, and we give them guidance. We've also published a number of self-assessments which will continue in 25-26. We've already done a self-assessment on purchasing cards, we've done one on governance, there's another self-assessment that's just about to go out on income and banking, and that is like a helpful aid memoir to bursars and other school officers. And really, if they sort of comply with those self-assessment checklists, then their audit is going to go quite well. So we are producing an array of best practice guidance now that we're putting on the Staffordshire Learning Net to help and assist schools in getting it right first time. But we don't just look at schools, we also look at, like I said, residential homes, complex needs units, and we do like a financial or administrative audit there. And you'll see on page 28, paragraph 28, some of the control weaknesses that were highlighted during the course of our work in 24-25. At the top of page 29 of your pack as well, you'll see that we did a piece of work within our area service offices looking at purchase card cash withdrawals. This is where we open up cash on purchase cards just for a limited number of cards so that they can withdraw money and use that money similar to a petty cash float for various purchases for service users and employees. That report also will be circulated to you after this meeting, as there are some high-level recommendations that have been made as part of that report. In terms of our final category, this is special investigations and our counter-fraud work. So in the confidential agenda, we will have Appendix 2, which sets out in detail our counter-fraud activities that have taken place during 24-25. As this is the open party agenda, I will keep this quite high level. But you will see on page 29 and page 30 of your pack a table which sets out the estimated and confirmed fraud losses following our counter-fraud work. So we've identified total fraud losses of 54,167 within the year. Some of that has come about due to our continuous controls monitoring, our CCM and our proactive work, and the remainder of that value has come from our special investigations. Some of those are still ongoing at the moment. And just so you know, in terms of how we receive fraud referrals, there are a variety of ways in which we receive these fraud referrals. It can be direct from an employee, either via the whistleblowing policy or just direct into audit. Our door is always open. We can receive anonymous letters. We can actually highlight a need for fraud investigation following our audit work. And also we have a fraud e-form that's on our website as well as a fraud hotline telephone number if people would like to make contact with us. And that goes straight to voicemail, which is picked up each day. We have received during the year 37 fraud referrals. Of those, 29 relate to our own council business. And again, I'll go into some of that detail a little bit later when we get to Appendix 2. But interestingly, and again for information and to give you a bit more context, on page 31 of your pack at paragraph 33, this sets out the actual and estimated fraud losses that we've had actually over the last decade. So whilst the value is a bit higher than the previous year, it is relatively low compared to previous years. And then in terms of how we evaluate this category, we divide this element into two. We look at the financial losses and also whether there was any control lapses. So you'll see at paragraph 34 how we've evaluated this category. So as the fraud losses of 54,167, that falls into the band of 50,000 to 150,000 loss. So there's a deduction of 10% for that area. And then on the second half of the equation, we've got what control lapses has there been. So because we've highlighted some issues in relation to purchase cards and send personal budgets, we've deducted a further 10% for payment mechanisms. So that category comes out at 80%, so that category fails. And I think, sorry, I did forget to mention the category 4 for the compliance reviews, because of the number of limited assurances, that category did fail. And that came out at 59%, and that category fails because it's below the 90%. Apologies for missing that piece of information. So in terms of how we bring this all together then, so like I said, we look at which categories pass and which categories fail, and that then denotes the overall opinion given and awarded for the financial year. So you will see that there are two categories that fail: compliance reviews and special investigations, and the detail of the outturn hopefully has provided you with the information that you need to see how we've come to that conclusion. So overall, with those two categories failing, we have adequate assurance given to the overall effectiveness of the organisation's governance, risk and control framework for 2024-25. So the final part of the outturn relates to our own performance measures, because like I said at the beginning, the annual internal audit outturn report should include the opinion, a summary of the work that's been carried out, as well as a statement on conformance with the public sector internal audit standards. So I've demonstrated that we've got the opinion and also the work that backs that up. So the final jigsaw puzzle part is conformance with the standards. So we have set ourselves just two KPIs on our internal performance, and these are the two key ones. One is around delivery of the internal audit plan, and we have our own internal benchmark of 90%, and within our systems audits and our compliance reviews, we have delivered 91% for each of those areas. To bring in the qualitative aspect of our internal audit service as well, after every draft internal audit report, we send out a client satisfaction survey. We don't get them always back. We do chase, but we don't always get them back. For the ones that we have got back, though, there's 13, 14 questions, and we like to get an average of score of 4, which is good. And for all of our audit work, we have achieved a score of 4 or higher for our audit work. And the client satisfaction survey covers all various stages of the audit work, from the preparation to the planning to the brief to the field work, how that was conducted, the professionalism of the auditor, and the final report and the recommendations. So it actually covers the whole breadth of the audit process that the auditee gets involved in. So, as part of the PSIAS and the local government application note, all internal audit services are required to measure themselves against the standards. And one way that we promote conformance with the standards is that within the internal audit service, we have a quality assurance and improvement programme. And there's 3 aspects to that. We have our ongoing monitoring as part of each and every audit. It goes through a supervisory process and a quality assurance process. That's inbuilt within our audit management system, and it's all done electronically, where the test sheets and the work programmes and the brief and the report is all signed off online. We also have a periodic self-assessment. So annually, I will take the public sector internal audit standards, now to be the global internal audit standards, and I will perform my own self-assessment against 135 of the standards. And then finally, once every 5 years, we're required to have an external quality assessment. Our latest assessment is quite recent. It was back in 2023, and that was undertaken by SIPFA, and we did achieve the highest conformance rating, which was obviously pleasing to note for ourselves. So having done the annual self-assessment for 24-25, I am declaring that we are 94% compliant with the standards. We have a small number of standards that we're either partially compliant with, and there's 1 that's not in place, and there's 4 that's not applicable to the public sector. And on that basis, I am saying today and declaring that there are no impairments or restrictions in the scope or impairments in the objectivity of our work which prohibits me from delivering the annual internal audit opinion to yourself today. So, Chair, that's the Outturn report presented. I'm happy to take any questions.
Okay, members, do we have any questions, please?
Thank you. I just wanted to say I think it's a very good report. Thank you for the report. I did initially have a few questions prepared on the school audits, particularly on the purchase cards, but you answered those in the presentation, so thank you. So I have nothing further to say. Thank you.
Thank you, Chair. I mean, thanks to the officers for the comprehensive introduction to the report. I think it just shows the vast area of work that the County Council covers, and the audits cover all of the areas which we serve, obviously, services to our residents. And not to downplay any of those, I'd just like to raise one issue, and that's on page 23, where it's the tree management position statement. Obviously, it's under the area where we are obviously looking to improve, where weaknesses have been identified. And it says visual tree inspections were not being documented, which is contrary to the policy. And the audit review found that detailed inspections were not currently undertaken in all service areas. I think this is really important because we've had fatalities in previous years where trees on county council-owned land have led to fatalities. Also, we have many thousands of highway trees across the county, Many of those are concerned to residents, particularly when we have bad weather and winds. I think last autumn we had the storms, didn't we? And in my division, in Westlands, a number of trees came down, and luckily nobody was injured or killed. But it just shows that we really need to focus on this area, because there are many, many trees that are many, possibly hundreds of years old, that need to be reviewed. And I had obviously a request from a number of residents in my ward, which I took up with the County Council, and I wasn't really assured that that annual inspection really takes place, and that's a concern for residents. I think it's something I'd just like to put on there and note that tree inspection is really important, and I'd like to see an improvement in this in future years. Thank you.
So, Councillor Tagg, thank you for sort of your inquiry. So, again, and hopefully helpful to members here today. So, where there are recommendations, we will ensure that they are monitored through to completion. We have a recommendation portal. I know the head of Health, Safety and Wellbeing has recently also appointed an individual who's going to be looking not just at the audit recommendations, but ensuring that the corporate tree management policy is actually embedded across all the services where there are trees. So during the course of the year, we will obviously monitor all those recommendations, and in particular the high-level risk recommendations. And those actually get a further extra pairs of eyes on them, because all high-level recommendations and mediums that have been implemented and also not implemented get reported through to SLT as part of the Quality Performance and Improvement Board. So again, there's lots of eyes on all of the recommendations that are being made by the Internal Audit Service, and also, more importantly, those that haven't been implemented, because officers also get requested to provide information where they're not being implemented.
Cheers, thank you. It was my question is in relation to fraud and fraud prevention. The question is, do you do a background check on the people that apply for the XYZ type of funding, for example, for trees or for any type of funding that they require? Do you do a background check before you give them out the money, or is that something that doesn't happen? Thank you.
We do have a climate fund action fund for voluntary and communities and charities, and as part of that process there is an application process. We have previously audited this. This isn't in the plan for 25-26, but I do understand from the previous audits that we have undertaken that there is an application process that does ask certain questions, and that does have to get signed off by the ward member that would be closer to the project.
Thanks, Chair. Thanks, Debbie. Really comprehensive report. Just a quick question on paragraph 16. There are those 5 areas where there's limited assurance. I'm sure members would be interested to know if that's a worry at all. Yeah.
Well, hopefully I tend to keep quite cool. No, I'm not worried. I think it's a good thing to highlight sort of issues for improvement, because it focuses the mind. And like I say, sometimes services welcome a limited assurance review, because they can start to then put in place either extra resources to target something that's key and critical to the council. So no, I'm not worried at all.
Thank you very much. It's Neil Parton. I was just reading through the notes of these cash cards for the vulnerable and learning disabilities and everything. Do we know what the limit is on those cash cards, or how much cash can they withdraw at one time?
The limit on cash cards is set by the service, and also what cash withdrawals there can be. I think you can go into the bank and withdraw cash up to the value of £500. And then there are individual limits set for online transactions, and that's set by the service. I would have to look into a specific card to give you a specific answer, but there are limits, and it has to be justified by the head of service because they sign off the application for the purchase card. But cash withdrawals, it's limited to either at the ATM, I think it's 250, but if you go into the bank, you can get £500.
Thank you very much. Thank you.
Can I just add as well that as part of a withdrawal process, there is a form that is completed and has to be signed off, and also the various receipts and supporting documentation that would back up that withdrawal. That has to stay with the ledger for the withdrawals.
Follow-up question. Although they can draw that much and they're vulnerable and some with disabilities, is there any checks that they don't go alone, or is there any checks that there are people with them?
The actual purchase card belongs to the county council, and it will be an officer that would go to get the cash out, and then that cash almost acts as a petty cash float and stays in the office. So you wouldn't get a vulnerable service user being given a council purchase card. That's restricted to just officers. They're just given the required cash, and there's a justification process for when they have that.
Thank you very much. Thank you.
Cheers, thank you. So, follow-up question from Nick Parton. When you said the withdrawal limit's £500, how do you keep a track of that £500 that's been withdrawn to make sure it's been spent in the right areas? Do you ask them to keep receipts, or is there any other way of keeping track of what they've been spending on? Thank you.
Yes, so there's a guidance and there's protocols in place for petty cash withdrawals. So at the area service offices, there's various forms that have to be completed, access to purchase cards that have got cash open on them, because we do only have a limited number of purchase cards that have got cash open on them. So if you want to get cash out, there's a form and there's a process that gets completed. That person with that cash card has to physically go either to an ATM or the cash point. They get the cash comes back to the area service office, it gets signed in by, which should do, this is the proper process, gets signed in by an independent person to say that cash is coming back and replenishing the petty cash float, and then that is used within the area service office. Again, there will be various forms depending on what is the nature of the expenditure that has to get signed off, and there'll be various other supporting documentation and records held within our care director as well that substantiates the need for that expenditure. Any money that is then used by either the employee to buy goods on behalf of a service user or handed over to a service user directly, there are various forms that have to be completed to say that they've took receipt of that cash, and then that documentation has to be loaded onto our purchase card system. So it's all held electronically, so the receipts have to be loaded on, as well as the various forms and completed approved forms are held on Care Director as well. In addition to that, there is a ledger, tends to be on an Excel spreadsheet, that obviously when a withdrawal is made from the ATM and that money replenishes the petty cash float, there's an ongoing tally of the balance that's left with cash in hand, and on a monthly basis that should be independently reconciled by somebody independent of the administrative arrangements for that money. So there are various checks and balances in place, and all those records, like you would have an invoice, all those records have to be kept for 6 years. So it's all held within the purchase card system on Care Director, and there's also various other documentation that's held within our SharePoint system as well.
It's more of just a supplementary question. Because you said the £500 gets signed in, obviously it goes into a process and so forth. How often is that book being checked, and is it up to date? And if it isn't up to date, and obviously money goes missing left, right and centre, how long does it take for you to go and recover that money? Thank you.
Internal audit doesn't do the monthly check. The monthly check is carried out by a line manager at the area service officer, so there should be a monthly reconciliation of the cash in hand to the ledger to see that everything balances.
Okay, just to let members know, because we're on a tight time frame, please email your other questions, because we need to move on, please. If I can just give that advice to members. Thank you. So can we move on to agenda item 5, please?
Thanks, Chair. I think that's the next few agenda items belong to me. So I'll start off just by introducing myself again. So I'm Richard Lee. I am a director at KPMG and I look after the external audit of the County Council and also the pension fund as well. So I've worked at KPMG now for over 20 years. And throughout that period, I've audited local government entities across the region, across the north of England. As a bit of background, KPMG are appointed as the auditors to the Council and the Pension Fund by an organisation called Public Sector Audit Appointments Limited, and they are responsible for allocating the audit firms to pick up the specific bodies, and also they're responsible for setting the fees that we get remunerated. We've been the auditors of the council now. Our first year was 23-24, and I think hopefully officers would agree. I think we've developed a strong working relationship, but one where we're able to robustly challenge the practices that are taking place, and I think that's really helpful. So I think we're in a positive footing to go forwards with the 24-25 audits of both the council and the fund. There's two items on the agenda because we have multiple responsibilities. So, as I said, we are the council's auditors, so that involves two aspects of work. So we look at the financial statements, which is a traditional financial statements external audit, and then we also have a responsibility to consider the value for money arrangements, and we do that against the NAO guidance, National Audit Office's guidance, which is followed by all external auditors of local government bodies, and that's to provide a commentary against three specific areas, which I'll come on to. And then the other aspect is the pension fund audit, and again that is a traditional external audit of a pension fund, which is slightly complicated in local government by the fact that the financial statements sit in one document, albeit that they are separate engagements from our perspective. So I'll take you through the two documents that we have in the pack. I'll go through at a relatively high level, but I'm conscious that some of the content is quite technical audit language, so if there's anything that doesn't make sense or if you want a bit more detail, please just interrupt me and ask questions, but hopefully we can go through at a level which is understandable. So the first document, it actually came through this committee in April, but we thought it would be helpful to recap so that you have the full audit picture in one place, taking you through from the audit plan, and then as we progress through the cycle, we'll get to a point where you receive further reports to us on our findings as we've completed the audit. But I think it's important to have that thread from where we started off through to completion, so that'll come to a later committee. I'm going to start by jumping into our report to page 52 of the pack, page 4 of our document, which is materiality. And I don't know how familiar you are with the concepts of materiality, but we get a set of financial statements that Rachel and Pete's team produce, and there's some really, really large numbers in there. So gross expenditures over £1 billion for the council. So we only have a finite amount of time to perform the audit. So we develop what's called a materiality level. So for the council, it's a big number, it's £29 million, but in the context of that £1.3 billion of expenditure, clearly much smaller value. And that level of materiality is what we determine to be whereby somebody picking up the accounts cold, if there was a mistake in there for £29 million, they might form a different opinion of what the council's activities and performance is like. So a big number at 29 million, but I'd like members to look at the other numbers on that page. There's one there, 1.4 million, so we would report through to the council errors that are above that threshold level. So in terms of how those numbers apply, if there's an error in the accounts that's around about £20 million, I would be saying, and the council didn't make an adjustment, I would be saying the accounts are materially wrong and would qualify the opinion on them, or could qualify the opinion on them. But below that level, if there's errors around above £1.4 million, then we'll report them through to, and they're not adjusted, we'll report them through to committee members so that you can discuss and debate them. And we apply that right the way through the process in terms of the financial statements just of the council. Part of our responsibility at the planning stage is to do risk assessment work. So I think it's important to think about the risks from there's a whole plethora of risks that officers will be managing on a day-to-day basis, but the risks that we're considering as external auditors are the risks of the accounts being wrong. So they're a very, very focused set of considerations, and there are three significant risks which we've identified relating to the financial statements of the council, and then another audit area which is slightly lower from a focus perspective. It's not those risk areas are not unusual to the sector. They are exactly this, very similar risk profile to what I would expect to see across the majority of local government bodies, and in fact, probably the majority of the public sector as well. So the following pages go through those risks in a bit more detail. So these are set out on pages 6 through to page 11 of our report. So the first risk is around land and buildings. So the council owns a lot of land and buildings, and you have them valued on a cyclical basis. And whenever there's a valuer involved, then they're applying judgment and estimates to the valuation methodology. And from our perspective, that creates a risk that they could be picking the wrong basis or the wrong assumptions. And so therefore we have to challenge the valuer on the valuation methodology, the assumptions that have been applied, the assets that have been applied, the consideration of the assets that haven't been valued as part of that cycle. So we do a programme of work which is looking at that valuation methodology to determine whether the numbers in the financial statements are fairly stated. As I said, that's a common risk across all local authorities. The second risk is one called management override of controls. So this is a standard risk for all audits, regardless of the setting or the sector. And this is basically the hypothesis or the position that management have a unique position in the organisation whereby they could direct people to do the wrong thing. That's our starting hypothesis. And the way that they could do that to manipulate the accounts is by, from our perspective, we consider it to be through posting journals to move numbers around within the accounts or present things inaccurately, purposefully. So we look at we develop what are called high-risk criteria. We look for unusual combinations of journals in the accounts and the underlying ledgers, and then we trace those back to the supporting information to make sure that we're comfortable that those journals are actually legitimate and bona fide. And then we report those findings back to you. So we go from a position of having thousands of journals, possibly down to maybe single-digit journals where we think that they maybe don't follow the usual patterns. And we very much focus on cash journals as well, so journals where you could have misappropriation of cash for personal gain. And then the final significant risk area is in relation to the council's share of the pension scheme numbers. So we'll come on and talk about the pension scheme separately in a minute, but like the valuation of land and buildings, the valuation of a pension scheme within a set of council accounts is dependent on support and numbers being provided by actuaries. They apply lots of estimates and judgments again when they're forming the numbers that sit within your financial statements, and because of the magnitude of the pension numbers, they're by far the biggest numbers in the accounts, a really small difference on one of those estimates could result in really significant deviations from our expectations in terms of those numbers. So like with the valuation of land and buildings, we use our own actuaries to challenge the actuaries that support the council and make sure that we're comfortable with the methodology, the estimates and the underlying assumptions that have been applied. So those are the three risk areas. There is another area which is new for the council to adopt this year, which is a change to some specific lease accounting standards, which again is not unique to Staffordshire. It's applying across the whole of the local government landscape. There's commentary included within our report around that, but I won't go into any detail on that. The other area of work, so this picks up on page 64 of the PDF pack, page 16, is value for money. So very briefly, I'll just summarise our responsibilities on value for money. So again, we follow the National Audit Office's requirements to consider value for money in public sector bodies. So the NAO issue what's called Audit Guidance Note number 3, which sets out our responsibilities. It considers three specific areas, which is financial sustainability, governance, and securing economy, efficiency, effectiveness in the way you spend your money on a day-to-day basis. So, and we are looking very specifically at the arrangements that the council has in place in the year that we're considering. So this is around making sure that you have robust monitoring of financial information, that you're setting budgets and medium-term financial strategies that consider the risks that affect the council from a day-to-day perspective and a longer-term perspective. It's looking at the arrangements that you have in place to challenge those through committees like this, through scrutiny committees, escalation processes, making sure that you've got appropriate regulations in place and standing orders. And then it's also considering the way in which you spend money on a day-to-day basis, and that you try to make sure that you're getting the most bang for your buck, and how you realise that through benchmarking, comparison with others, and opportunities to work more efficiently. So that's a very, very sort of tight focus, definition of value for money, but it's the one that we have to follow in determining the commentary that we're required to issue. Now that work's underway at the moment in terms of forming a risk assessment, and we'll bring that through to a future committee in terms of more detailed commentary. So I wasn't going to say any more specifically on the council's audit plan, other than just to say that our audit work is over the financial statements is due to be delivered basically from now until there's a statutory deadline which is February where we stop basically, and that's because of some issues with with local government audits over the past few years. But I expect that we will be performing the bulk of our audit work between now and November time, and then it will be the tail of work that if there is any that gets completed beyond that point. So I'll just pause there on the council audit plan, if that's okay, and then I've got the pension fund plan to go through, and there'll be a lot of repetition on the pension fund plan, and that has been through pensions committee on Friday as well, but I'll just take you through that once you've had an opportunity to ask me questions on the council plan, if that's okay.
Thank you. I wonder if you could go into a bit more detail about the disclaimed opinions of the last few years and what's expected for this year. Yeah,
that's a really good question. So, just as a recap, I think it's probably local government has had some challenges in terms of audit delivery over the last probably 5 years, 5-year period, and that's probably been driven by a couple of things. So, some very specific kind of accounting issues around the valuation of infrastructure assets, so roads and highways and stuff like that, where there was some difficulty getting guidance from SIPFA around the interpretations of how to apply those accounting standards. And then I think also there's probably been a capacity issue from an audit perspective, whereby some of the other firms haven't necessarily been able to prioritise local government audit to maybe to the extent that it had been previously. And then the third aspect is I think there's been a quality step up from an audit delivery perspective over that period of time, which has probably contributed to the capacity point, whereby it takes a significant amount longer to do an audit in 2024-5 than it probably did in 2018-19. So we came back to the audit market in the local government audit market for the 23-24 audit. We're now, that's KPMG, and we're now kind of following a pathway which has been set out by PSAA, Public Sector Audit Appointments, the Financial Reporting Council, so they oversee audit quality across the whole of the UK audit market, and then also in conjunction with the National Audit Office, which is basically a mechanism to try and make sure that audit goes back to having that kind of core position within the finance team sort of annual calendar of activities, that audits get delivered at the right time and that they actually get completed. So a series of what we'll call backstop dates were introduced, whereby some of the historic audits were just not signed, and so they could have been going on forever and ever and never been signed. So last year, December 2024, EY brought all of their audits up to date. They basically disclaimed a lot of those, which means they drew a line under it and said, we've done as much as we can do. We're signing them off at this point. They're qualified opinions, and that's it, basically. And then what we now have to do is basically work out the gaps in that process and try and iteratively get back to a traditional audit cycle. So we issued our first opinions in February of this year for 24-25. That's the first KPMG opinion. And then we have another backstop date of end of February 2026 to issue the 24-25 accounts. So 23-24 was February 25. 24-25 is February 2026. And then that backstop date gradually comes forward. So over the coming years, we should get back to some semblance of normality. But we've been working very closely with the finance team to try and work through some of the challenges that have maybe been faced from an audit delivery perspective. And I think that's, certainly from my perspective, feels like it's going well. But happy to provide more or less detail on it.
You mentioned about the 1.4 million threshold in terms of discrepancy in accounts. Just wondered what the last year was, and just around kind of identifying, you spoke about the bang for buck on those defects. Do we ever do any analysis on the cost per defect and then feed that back to the council?
So in terms of the materiality level, last year the materiality levels were slightly lower, but only marginally. I think headline materiality was 25 million rather than 29, and that what we call misstatement posting threshold was 1.25 million. And there's a number of reasons for that slightly lower threshold. Last year was our first year as the auditors. This year we got a better understanding, so we're more comforted, so we can raise that threshold slightly more. In terms of the value for money conclusions, we didn't have any significant risks of significant weakness at the end of the... We didn't have any significant weaknesses, in respect of the value for money arrangements. We did have a couple of significant risks which were focused on the children's services and the Ofsted arrangements. There'd been an Ofsted inspection, and so we were looking very much at the arrangements around how the council have followed that Ofsted inspection up, and that will continue to be the main focus area for our value for money review in 24-25.
Okay, moving on to item 6, please.
Thanks. Well, this one should be a bit more shorter in terms of going through. So it basically, the report that you've got on the pension fund starts on page 83. The format is very similar to the council's audit plan, but we have to, because it's a separate audit, we have to issue all of the documentation separately to make sure we're compliant with the audit standards. You'll see the materiality there, levels there are much higher, and that's again though, it's a function of the size of the fund. So £76 million as headline materiality, but that's in the context of over £7 billion of assets. So and a reporting threshold of 3.8 million. So that's really quite a small threshold compared to the volume of assets and investment that the fund has. We follow exactly the same process. It's a separate team of specialists. We have actuaries who are qualified to audit pension funds, and they work closely with the council officers in that area. We have just the two significant risks for the pension fund, which are management override, which we talked about previously, standard audit risk, and we also have the pension fund's directly held property as a significant risk for exactly the same reasons. The valuation specialists that you engage to value assets that are owned by the bricks and mortar assets that are owned by the fund. And then there's a variety of other audit risks there, which are predominantly focused on the investments that the pension fund holds. So they're categorized in what's called a fair value hierarchy, which just picks out the different styles of investments, things like equities, where you can go and agree them to agree the valuations to listed stock values, and then right the way up to kind of what's called a pooled investment vehicle, where you put all your money together and then the vehicle has a value, and we have to make sure that that's appropriately valued by looking at their trading activity. But the focus of the fund is predominantly around the investment side and the asset value side of things. There's a commentary included on each of the significant risks and the asset valuations within the document. As I said, it's been through the pensions committee on Friday, where there was challenging questions, I think, on the report. We don't issue value for money conclusions or commentaries on the pension fund. That's not part of the scope of our work. And the work on the pension fund is up to date. We finished all of the audit for the pension fund last year, and we anticipate that we'll finish all of the audit testing in September this year as well, which is, so these accounts will end up in the same pack of information as the council's numbers and council's financial statements, albeit it's unlikely we'll get to the end of the audit of the council. The pension fund audit will be complete and will be, well, I anticipate should be a clean opinion. So that's probably all I was going to say. What I should have said on both sides is, though, that we do lots of rigorous checks in terms of our independence. So we should just say for the record that KPMG is independent of the council and the pension fund, and that's down to an individual auditor level rather than just considering it as a fund. So again, happy to take questions on the fund.
Thank you, Chair. I've got two questions, one for Richard and one for the officers. Thanks, Richard, for the presentation. You are an established firm. I'm sure members are confident that you will do a good job, which is good. On valuing land and property and investments and things like that, this is obviously a specialized area. Do you tend to bring in your own experts to check on what's been done, or you just do it internally?
Yeah, good question. We engage valuers. So KPMG has a team of real estate valuers who are surveyors and that's their background. They're not accountants, they're valuers. So the audit team engages those specialists who are the right people to challenge valuers. It gives rise, actually, that dynamic gives rise to a recommendation that we make on an annual basis to officers, which is, like, I'm not qualified to challenge on evaluation, so I bring a specialist in. The council engages valuers or has internal valuers, and so it's difficult as well for them to challenge the valuers, and so what you end up falling out of that is often a recommendation about the level of challenge that officers can provide to their valuers, but that you'll see that later on in the reporting.
For the officers, when the PSIA set the fees, do we get a chance to challenge these? Because I looked at the increases; they're quite steep. Statutory audit, 27k up, that's 8.4% rise, and on the pension is 11k up, 11.3% rise. Do we tend to get a chance to challenge that? Because that's way above inflation.
You're correct, there has been a substantial increase in the fees in the past year, but the PSAA did give us some warning of this. They gave us a little bit of notice that this was going to happen, so we were able to include that in budgets for the current year. The PSAA set the scale fees, and although they do engage in consultation with the Director of Finance and Resources, to be honest, there's not a lot of scope really to challenge the scale fees. However, the additional fees that are proposed must be agreed first with the Director and then approved by the PSAA as well before we would pay them.
Okay, thank you. Moving on to item 7, please.
Right, that's me. Okay. Just make sure that the technology works. Okay, so this morning I'm presenting the Local Code of Corporate Governance report. We mentioned this as being a really key document as part of the training that we undertook on the 8th of July. So in terms of, I thought it was useful just to outline the principles of good governance in the UK public sector. In the public sector context, governance refers to the framework of rules, relationships, systems and processes within and by which public bodies are directed, controlled and held to account. So it encompasses those areas. So firstly, looking at accountability, ensuring that public officials and institutions are answerable for their actions and decisions to the public and other stakeholders. Secondly, transparency, making decisions and processes open and clear to stakeholders, operating with integrity, upholding ethical standards and preventing corruption or misuse of power. Fourthly, on stewardship, managing the public resources responsibly and also sustainably for the future organisation. And then finally, looking at leadership, setting strategic direction and ensuring the organisation achieves its objectives. And then finally, effectiveness, ensuring that governance arrangements help the organisation to deliver its intended outcomes efficiently. So governance arrangements in the public sector are keenly observed and sometimes criticised. Significant governance failings attract huge attention. Local government organisations are large businesses and are vitally important to taxpayers and service users. They need to ensure that they meet the highest standards and that governance arrangements are not only sound but are seen to be sound as well, so we demonstrate that. So the legal status surrounding this area of work, it's outlined within those Accounts and Audit Regulations 2015 that Debbie referred to as well as part of the Internal Audit Outturn report presentation. This time it's in relation to Regulation 6 that talks about that review of internal control and preparation of the annual governance statement. So the two sort of specific paragraphs relate to 6.1 states each financial year a relevant authority must A, conduct a review of the effectiveness of the system of internal control and also prepare an annual governance statement as well in accordance with proper practice. So the findings of the review of making sure that we've got a sound system of control needs to be considered by the authority or a committee of that authority, and this is that committee of the authority that considers that. So how do we ensure that we deliver good governance within the public sector and within local authority? It's in relation to the SIPFA Delivering Good Governance Framework. It's published in 2016, but there is an addendum that's recently been issued. So these are deemed to be those proper practices that Regulation 6 referred to. The latest version also includes additional information regarding the nature of the annual governance statement itself and the types of assurance that are needed. And one of those key elements relates to how the Code of Corporate Governance has been implemented and reviewed and assessed within the organisation. So we did mention at the training session those 7 pillars that sit within the governance, good governance framework, those cross-cutting requirements, which is behaving with integrity, demonstrating strong commitment to ethical values and respecting the rule of law, and secondly, ensuring openness and comprehensive stakeholder engagement. And they're supported by the 5 pillars, defining outcomes and comprehensive social and economic environmental outcomes, determining the interventions necessary to achieve intended outcomes, thirdly, developing the capacity of leadership and individuals, secondly, or fourthly, to consider the managing risks and performance, and finally, implementing transparency, reporting and audit to deliver effective accountability. So all of those fit within that governance framework. So the role of the local code of conduct, sorry, code of governance. So the code should cover that it's aligned to those principles that we've just outlined. So you'll see within the document that you've got before you, at the section towards the back of that document, from pages 123 through to 143, all of the details that sit behind each of those pillars. So how within Staffordshire County Council we meet those objectives across those requirements. So the key responsibilities across all members and staff are also outlined within the Code of Governance, and they're on page 19. And they demonstrate that everyone has a responsibility for developing, maintaining and implementing the Council's governance, risk and control framework. So the local code should be a public document. It should be on or a web page. It should be easily identifiable on the website. It provides a useful reference for both officers, elected members and the public to understand how governance works and the authority's commitment to good governance. So in respect of the report that we have today, so the recommendation contained in the report is that members approve the updated code, the 2025 code. This is building on a code of corporate governance that's been in place and in situ for a number of years. The key changes have been highlighted in yellow for members' reference, and these highlight where the framework has actually been strengthened and additional controls have been brought forward, and they're often as a direct result of highlighted actions in previous versions of the code. Those new actions are also identified within the document and included and picked out in yellow for you, and these will be tracked to ensure that they are progressed by the organisation as part of the work programme for the Corporate Assurance Board that meets on a monthly basis. So hopefully that gives you an overview of the code and also how it fits into that wider governance framework of the organisation. So I'm happy to take any questions that you may have in relation to the report that you have before you today.
Councillor Tagg.
Thank you, Chair. Yeah, good corporate governance is key to any organisation's success, and we've done very well with that, I think, over many, many years. I think many people are aware, and it's publicly aware, that obviously there's going to be a sort of an external audit almost of our finances, the Doge effect, which I think is going to be descending upon Staffordshire. How does that fit within our corporate governance rules? I'm thinking, looking at page 116A2G, how are we going to safeguard the corporate governance through that process? And shouldn't this committee be the one that signs off the controls around a political party coming in from the outside and auditing council finances?
Thank you. I'll refer to my colleague, the Monitoring Officer, for a response.
Thank you, Chair, and thank you for the question. At this time, we've received no formal request or notification of the Doge audit. Until we receive that formal notification setting out the terms and reference and details of that, we won't be able to respond to the query in full. I note your query, and I'm happy to respond and update once the request has landed.
I recommend that members approve the updated Code of Corporate Governance and resultant action plan produced in line with the Sit for Solace framework, delivering good governance in local government, published in April 2016. Yep. Thank you. Moving on to item 8. Lisa.
Thank you, Chair. Before you have the updated risk management policy statement and strategy update 2025. So this is building on an existing policy that's already been within the organisation implemented. We have undertaken a detailed review of our risk management arrangements to strengthen them, to develop how our risk registers are maintained within the organisation, how they're updated, how they are then subsequently presented through to SLT and then also to yourself as members of the Audit and Standards Committee. This particular document is a key strand of that work, and it will be is being used as part of the workshops that are being developed and rolled out by the Risk and Insurance Manager together with our insurance partners Zurich to ensure that all risk owners and senior leadership teams within all the various directorates within the organisation are fully up to speed with regard to risk management and how to assess risks, how to identify them, how to identify controls that are in place to mitigate those risks, where we need to take action to strengthen those areas to obviously deal with those risks that are being identified are being rolled out. As part of that exercise as well, we'll have a detailed toolkit that will be finalising, that will help and assist all individuals within the council to manage risk effectively. In terms of the detailed policy document, I'm happy to take any questions with regard to anything specific, but the recommendation to the committee is that this document is approved. Thank you.
Okay, David.
Thank you. Just looking through the document, part of the responsibilities of this committee is to look at the content of the strategic risk register and proposed risk mitigation plans and monitor the implementation. Cross-referring that to the plan for the committee, I can't see a paper until March next year, and looking back, I couldn't see the last time that happened. So are there any plans to bring the risk register to this committee sooner or more often?
Thank you. Yes, in short, yes, we are planning to bring that information to the Audit and Standards Committee. It will be incorporated into the forward plan for the next meeting. The information is there. It's subject to review by SLT, and at a suitable point we'll then bring that through. Thank you.
Councillor Wells.
Thank you. On the risk identification, I was wondering if is that just for internal procedures and contracts, or is that external for example, human resources and retention? Does that work for AMI contracts and our adult social care contracts, or is that just internal county staff?
This will be risks in relation to service delivery. So if service delivery is being undertaken by AMI, it will be the risk to the council that would be incorporated within having our services delivered by third parties. Thank you.
Moving on to item 9. Okay.
Thank you, Chair. This item relates to appointment of members to the Standards Panel for the year 25-26. I'm mindful that committee members have had the benefit of receiving the papers in advance. I don't intend to read through this very short paper in detail. I will take you to the recommendation for this matter, and also, if I may, then take you to the role of the panel and those appointed from this committee to the panel. The recommendation for committee today is that members note the decision of the full council, that was on the 22nd of May, and approve the nominations of the group leaders to appoint the members to the Standards Panel for 25-26. The proposed members appointed can be found at paragraph 12 of the report, and that is Councillor Thomas Baker, Councillor Andrew Clisset, Councillor Craig Humphreyson, Councillor John Pendleton, and Councillor Alex Farrell. The role of the very important role of the Standards Panel and when that Standards Panel comes into operation can be found from paragraph 9 of the report. As monitoring officer, I have to consider complaints against members, and within the responsibilities and duties that I have, I can make limited recommendations. Where it appears to me that I'm not able to make a recommendation that is sufficient for the allegation that has been made, I refer matters to the Standards Panel, which is made up of the 5 members that I've just read out. Taking you to paragraph 9, it sets out that where complaints aren't resolved at the initial stage, I refer the matter to the panel. And then, for reassurance, the accused member is invited to attend and an independent person is present during the proceedings. The panel then makes a decision based on the evidence presented. And then the possible outcomes for panel are set out at paragraph 10 of the report. If panel upheld the allegation, the sanctions include formal letter, recommendation for removal from committee or public censure, and that's by reference to full council. That sets out the request for today, the recommendation for today, and a very brief background to the panel process, which is also supported by independent members. And again, within the report, you'll note that we've set out for you the detail about how we appoint independent members and their role. Chair, if there's nothing further I can assist with, I'll take questions. Thank you.
Any questions? Okay, moving on to item 10. Rachel, please.
Thank you, Chair. This report is a report of the FRC, the Financial Reporting Council, and it is coming before members today to provide some assurance that there is an external check on our external auditors So in Richard's discussion about the audit plan, he mentioned the FRC as being the body that oversees audit, and this report just provides members with some assurance about their processes in regard to their quality checking of audits that are conducted. So that's nationally across the country, and obviously by all the audit firms, not just ours at KPMG. I would also like to just draw members' attention to the backstop dates. So again, Richard helpfully explained about the backstop dates in his presentation, and they are there in the covering report in the table there for members to see. And as previously mentioned, they do creep ever earlier, so that hopefully by the time we come to the audit of the 26-27 accounts, we will be back into normal timescales for audits and presenting accounts to this committee. So again, I wasn't going to go into any great detail on this report, but happy to take any questions if there are any.
Moving on to item 11. Lisa, please. Thank you.
Thank you, Chair. This particular document is one that you will see included on all agendas. It outlines the areas that we'll be considering at each of the forthcoming meetings in the remainder of this particular civic year. Draw your attention to those items that will come forward for discussion on the 30th of September. Mainly the draft annual governance statement, the settlement agreements annual report, the value for money risk assessment made reference to by our external auditor, together with the National Fraud Initiative update and the any additional items that will be identified as part of the agenda setting process that we adopt in conjunction with the chair for the committee. So with the addition of the strategic risk register to come into a future meeting, I'm happy to take any questions in relation to the proposed agendas or for any additional items that you may wish to have considered as part of that process. Thank you.
David?
Sorry, I have a, excuse me, a similar question really about internal audit progress reports. In the forward plan, the committee only receives the half year and full year. It's more usual to receive, for a committee to receive quarterly progress reports to show things like progress against the plan, any changes to it, any issues that have come out of reports. Again, I wonder if that could be considered going forward. Thank you.
Thank you. Yes, Debbie and myself are having discussions as to how we can best provide that information in a meaningful way. And obviously we also continue to report the key risk areas through the limited, through any special investigations or any top 10 risks. So they would come automatically and are included where when they've been finalised as part of the agenda setting arrangements. However, we do take the point and the request, and we are looking at what information we can generate within the K10 audit system that will be able to give you that overview. But that's currently in development. Okay, thank you.
Councillor Tagg?
Thank you, Chair. On the sort of standards code of conduct side of the business of this committee, do we know when the new sort of code of conduct will be, and the changes relating to that which the government want to bring in will be coming forward? I saw at the LJ conference last week, ministers were talking about this new robust code of conduct to protect members and members of the public, etc. But little detail was given. But there was a consultation, wasn't there, recently? Do we know when we will have that code of conduct, and does that then come to this committee for adoption, or I suppose goes to full council as well?
Thank you. In answer to the first question, no, there's no date yet given in relation to the new proposed code following on you're absolutely right, from the consultation that was undertaken. In terms of once the code is out, we will be reviewing and are standing ready to review the code. At that point, yes, it will need to go as an amendment to the Constitution to full council. Thank you.
Okay, moving on. Exclusion of the public. That the public be excluded from the meeting for the following items of business, which involve the likely disclosure of exempt information as defined in the paragraphs of Part 1 of Schedule 12A of the Local Government Act 1972. Thank you.